Hi guys, this is Rahul, and today we will be talking about different trading styles. Now let's start with the four primary trading styles. We have scalping, intraday, swing trading, and positional trading. Right? Now the order in which these trading styles are listed is in the same order in which we will be looking at in terms of time frames. What I mean is scalping is done on the lowest time frame. Then we move to a higher time frame for doing intraday trading, still higher for swing trading style, and finally we go on to the larger time frame like the weekly and the monthly for positional trading. Okay, so let's go ahead and check this on the charts. Now what you see here is the 1 minute chart of gold. A guy who's trading as a scalper would probably be looking at this as a double top, okay, and after this candle closes he would take an entry at this candle and exit at this candle. So he's in the market now. Here the 1 minute chart, so every candle is 1 minute, so he would be on the trade for exactly 3 minutes. All right, so a scalper, what a scalper basically does is he would enter a trade on the minute chart or the lesser lower time frame than the minute. So now you have also charts like the 1 second, 5 second, 15 second, and 30 seconds. So somebody who trading on 1 minute or lesser is called a scalper. A scalper would be in a trade for a couple of minutes, all right, and would be exiting very soon. So this form of trading is also done by machines where there would be an organization, financial institution, which would be trading called as high frequency trading, where they would enter. So in about a period of 1 minute, they would take somewhere about 20 to 50 trades. So they would enter and exit multiple number of times, trying to catch a price discrepancy in other instruments or other markets, other exchanges. Let's not get into all of that. The whole point being a trader trading on a 1 minute chart or lesser, trying to capture profits in a very short time frame is a scalper. So how they do this is they would trade with a very high volume of in terms of the position size, a very high position size, and they would try to capture a small movement and make a good amount of money from the small movement. So in this case, say they would capture a $1 move or a $2 move and come out of the trade in just less than a few minutes. All right, and try to make a lot of profits. Now the disadvantage of this form of trading is that you would be making a lot of trading decisions very fast. And another problem is that one loss that you incur would take away the profits of about 5, 6, or maybe the entire trading day. Okay, 5, 6 trades, or maybe all the trades of the entire day. So that is the challenge. The losses are generally much bigger than the profits. All right, so here it is very difficult to maintain risk to reward ratios unless you are very good, very experienced at finding the best entries on a 1 minute chart. The problem always arises that the market in a lower time frame is much more random, very difficult to take those decisions that quickly. The next time frame that we move on to is for intraday traders, which is basically the 3 minute, the 5 minute chart. So let's take an example of the 5 minute chart. Even 15 minutes is considered for the direction and 5 minutes for the entry. So on a 5 minute chart, when you see this, intraday trader would take a trade after this candle closes and would try to target the next support, which is here or here. Right, so a lot of people use pivot points for intraday trading, which work quite well. Now the problem is that you need to take a decision every 5 minutes with each candle's close. Now here you see we have rejections happening. We have a candle here which is closing above all the highs of the last few candles. Price still falls, it's still falling. So you should be able to decide very clearly whether you wish to hold on to the trade or you wish to exit, book your profits or book your losses. So decision making is much faster on an intraday trade. Any intraday trader is termed as intraday trader because he is bound to close his position on the same day and would not carry forward the trade. Now here again, since the risk of overnight move or a gap is not there, generally this is also done with a higher volume, because the amount of movement that you're capturing from the market is much lesser, right, compared to the higher trading styles, the other trading styles. This, in terms of difficulty level, is easier than a scalper, but when compared to scalping or positional trading, it is still a little difficult. So with more experienced traders, this would be much more advisable. Let's move on to something called as a swing trade. So a swing trading basically looks at all these. So here, if you see, the market was sideways and then we had a breakout at this level here, right? And price has not yet done the retracement. You see this candle is now starting to form an engulfing, but not yet completed. Now if this candle closes and engulfs this previous candle, we would be looking at a retracement of this move that has happened. Okay, so that's one way you could take a sell. Otherwise, if you see, let's say you see a retracement till about this price level of 1453, where the previous support is, here once you get a candlestick confirmation, you would take an entry expecting the market to go up further, maybe make an AB equals CD pattern, what you see here. All right, so this form of trading is called as swing trading, where we are trading on a higher time frame, like the 4-hourly time frame, or sometimes people also trade on the 1-hour time frame, where you need to take a decision only once every 4 hours. Okay, so now you see here there was a nice consolidation, we have a trend line, and a breakout happened. All right, now this could probably do a pullback here. So a lot of ways you could take decisions, but trading on the higher time frame, like the 4-hourly chart, and looking at reversal points to capture recent price movement, all right, that is called as a swing trade. So here we would expect, if you were to sell here after this candle close, we would expect to target the previous support. So we would be expecting to book our profits at about 1453, and we would enter somewhere around 1518. That's if we have a confirmation. So we're trying to capture the market from this particular swing high till this projected swing low because of the previous support. So that is called as a swing trade. All right, this is always done on high time frame. This is much easier and most recommended for beginners, because you have enough time to take your decisions. Now a lot of people lose money even with swing trading, but compared to intraday, compared to scalpers, this is a much easier form of trading. You have you have 4 hours to decide what you have to do. All right, so each candle closes only once in 4 hours. You can plan for your trades and make trading decisions. Like in this case, once this candle closed above this previous high, we see we have a breakout. Price moved up, came back a little bit, did a retracement, and then started the next move. Right, so we had enough time to plan our trades. So this is more for people who are more patient, and only difference is you are not closing your trade on the same day. So what that means is you would be also susceptible to the overnight losses, gaps, any news that comes out. So you have to keep a much lesser volume compared to the guys who are trading on the intraday charts, right? And finally, we move on to positional trading, which happens more on the daily, weekly, monthly time frame, preferably the daily or the weekly chart. So on the daily chart, if you see here, we have the daily chart. If we look at this, we had the trend line breakout at this level. So this particular candle did the breakout. Now a positional trader would look at this and try to enter here, and he would be holding on to the trade unless he sees a very strong breakout of the trend itself. Now he sees that this is the uptrend. To identify the uptrend, you would be drawing you'll be connecting the recent lows. So a position trader, what he would do is, now he knows that this is the next uptrend which is starting. He would expect the price to keep coming back to this trend line. All right, so a positional trader would actually try to buy more at every time the market touches this trend line, and would exit only when this trend actually breaks. right? So generally a positional trader would be holding the trade for much longer, maybe from a couple of weeks to a couple of months, could be a few years also. And he would generally be trailing the stop loss below the trend. A stop loss only at a point where he knows for sure if it reaches the trend has changed. So this could be done on the daily chart. It could be done on the weekly chart, preferably the weekly chart, because these are investors who would hold on to the trade for long periods of time. Alright, and this kind of trading is called as the positional trading. Now you have every trading decision has to be taken once a week, so you have enough number of hours to decide what is to be done. If you see here, we have just reached the resistance, but somebody who's holding a positional trade in this case would not worry until he sees that this swing low here is broken. So this is one wave, and a positional trader would expect some pullbacks, a retracement, and then the next wave, right? So that is how a positional trader would be trading. Now the strategy that we use on in our classes, or any strategy that you see, would be the same. It would work more or less the same way on all the time frames. All right, so your trading style would define which chart or which time frame that you choose, but the strategy would not really differ. You can use the same strategy, at least the ones that you learn at Hexorum. The same strategies would work on the minute charts, or to the hourly chart, to the daily chart, to the weekly chart. Alright, all you have to do is change your time frame based on your trading style, but the strategy would be the same. Right, that's it for now. We will be coming up with another video on how you can understand your trading style based on your personality very soon. Stay tuned. Thank you. See you guys. Looking forward to your comments on this video. Thank you.